It's a matter of insurance presented by the New Hampshire Insurance Department. Have questions about your coverage? Be sure to contact our Consumer Services Division at 1-800-852-3416, Consumer Services at ins.nh.gov, or be sure to check out our website at insurance.nh.gov. Be sure to subscribe also. This podcast is on all major podcast platforms as well as our YouTube channel where you can find all of our monthly webinars, which has all sorts of information for industry, consumers, legislative updates coming up soon, things of that nature. Today I'm excited to be joined by Chief Property and Casualty Actuary Christian Citarella. Welcome back to the show.
Thank you, AJ.
As the person who updates the website, you sent me an email the other day with like 6 different documents, and I'm like, what are these? They're the competitive market analysis of 6 different silos of insurance on the property and casualty side. So to start off with, how does the department track market competition when it comes to property and casualty lines? And as a regulatory agency, why is it important we do this?
The bottom line is we're required to by law. There's a statute, I think it's RSA 412, 13, and 14 that essentially put it in our responsibility at the New Hampshire Insurance Department and the commissioner's responsibility to monitor and assess the level of competition in the many different property and casualty insurance lines of business. To meet that responsibility, we conduct analyses annually and produce reports, and that's what was posted to the website recently of these 6 major lines. From these reports, there's more to it than just, is the line of business competitive? It's a competitive market. These 6 lines of business, and we can get into some of the details, but every one of them is competitive by any measure. But, I thought it might be interesting if we kind of highlight some of the other things we've noticed as other observations that we came across when doing these analyses.
Where does the data come from?
We use financial data from insurance carriers' annual financial reports, and these are submitted to the National Association of Insurance Commissioners, the NAIC, that is an organization that we as the New Hampshire Insurance Department belong to, allows all of the insurance departments from all of the states and 6 territories in the United States to basically pool the resources and collect that data from all insurance carriers across the country.
And the carriers are reported to submit this data every year.
They are required to, I believe property and casualty carriers are required to submit by March 1, and then the data becomes available to us early April.
Let's dive into some of these reports. I mean, we have everything, so jumping ahead, we've got personal auto, commercial auto, homeowners, commercial property, general liability, I want to know what exactly that means, and commercial multi-peril, which I definitely want to know what that means, because as a general consumer, what does that mean? But where do we want to start?
Let's start with some of the commercial lines.
Yeah.
I imagine that the personal lines are more at the forefront these days because every person in New Hampshire, whether you're a homeowner or even a renter, has to deal with that homeowner's line of business to cover your personal effects and your property. But commercial insurance is out there and available for business owners. They need to protect their autos. They need to protect their property. And then they also have a lot of liability to worry about. And so, to your question about what is general liability, for example, general liability is any responsibility or anything that a commercial entity might get sued for, to put it simply. You're at a grocery store and you slip and fall because there is a grape on the ground outside the produce aisle. It is the responsibility of that grocery store to compensate you for your injury, right? And so they're going to have a general liability policy to cover that liability responsibility. All sorts of other things. There's a crack in the sidewalk outside, it slips and falls, and you trip going up the stairs because there might be something wrong with the banister or something like this in a business. But it's more than that. General liability, we also, in that analysis, we also consider professional liability. So your accountant fills out your taxes wrong on your behalf, they are liable to you, and you can get compensation for any damages that may have come your way because of it. Or, a contractor installs something in your home faulty, your plumber does some bad work in your home and causes damage to your pipes. It generally doesn't come to the point of having to sue them if you say, hey, you did this wrong, and then they have their general liability, or in this case, it would be professional liability insurance carrier would then cover that claim. But we also include in there what's called products liability. So you purchase whatever it might be, a bicycle, or, and that bicycle, as long as, if there's something faulty about that product that causes injury or harm or damage in some way, you can get, there's a casualty or a liability claim against the company that produced that. So all that is in that general liability. One interesting thing about that line of business is that we have an awful lot of writers in the state that will provide that coverage. And a lot of the companies that write that business are very, they write specific policies to whatever type of work that a business owner might be doing. And so there are some carriers that will specialize in bicycles, for example, or they might specialize in
recently we just did insurance for farmers, like things of that nature. There's
farmers and ranchers, and there's folks that just certain niches of certain businesses or corporations. If you work in like the chemical industry or you work in manufacturing of certain types of things, then you're going to find that there are carriers that will specialize in that. And so they may only write a couple of hundred policies or not even a couple of dozen policies in our state, but they are the go-to carrier for that line of work. And, I'll just put another plug out as you did earlier. Whether you're on the personal line side or whether you're on the commercial side, work with a broker, work with your agent to find you that carrier and that policy that fits your needs.
Yeah, the common resource we suggest people go to is trustedchoice.com. But if you have a local independent agent, someone in that sector specifically, preferably with experience in your sector, is always suggested by us.
You mentioned commercial multi-peril. So this is that line of business where they sell what's called a BOP policy, a business owner's policy. And this is for a smaller business that just needs your basic general liability, your basic property, whether you rent a space or whether you own the building in which you do your business, you're going to need like the basic insurance policy. And it's not for larger, more sophisticated entities that have, complex insurance needs. This is, your a hair salon, or you're opening up your storefront and you need your policy. It's generally going to be a BOP policy in that what's called commercially multi-peril, and it's going to take care of the needs you have. That line of business is interesting in that we have a large number of companies, again, over 250 companies writing in that business. Wow. It fluctuates as far as which companies are writing more of the business. It's, the whole point of these analyses is to measure the competitiveness of the market. Well, in this line of business, you see different companies. Like we look at like the top 5 companies, and that top 5 companies is always within like a couple of percentage points of market share of each other. So no company has more than say 7% of the market at any given time, and those companies keep fluctuating, and that's a sign of a nice competitive market.
Yeah. So what about some of your analysis that you have with regards to these commercial products? Are there some things that stand out, or some things you specifically keep an eye out for to make sure it's a healthy marketplace?
Exactly. Well, again, we look to see who whether any companies or any group is, because again, understand that a lot of carriers are affiliated. So you might have like a Travelers insurance group, and inside Travelers, you might have a half a dozen different companies that write within that group. So we don't just look at individual companies, but we look at groups of companies. And we just make sure that no one company or a handful of companies is dominating the market, that there is fluctuation in market share. And with all of these lines of business, again, we're not seeing any one company that, or even a group have like 25% of a market. That would be a red flag. We also look at, is it easy for companies to enter the market? We're seeing more, companies come and go as the need arises. It's very easy to establish yourself in New Hampshire. We try to make rate filings and forms filings process at the insurance department easily and smooth to enter the market. And we're seeing that. We're seeing companies come in.
Anything else from the commercial side you might want to mention?
Just on the commercial auto side, again, there's been an increase in written premium. We're looking at the 2024 numbers, $233 million of commercial auto premium. It's up 11% from the prior year. Similar with commercial property. That's a smaller market. It's only about $135 million of business, and that's up about 15%. And each of those, commercial auto and commercial property, do kind of track along with their personal lines counterparts. And so we're seeing similar, changes in both rates and overall premium increases similar to what we see in personal lines.
Are there any correlations especially when it comes to business growth and development, when it comes to these insurance marketplaces with just general economic development in the state, especially post-COVID?
Yeah, exactly. And that's sort of some of the things that I would generally talk about on the personal line side, because folks are seeing it, right? So take homeowners, for example, right? Folks are seeing their homeowners premium go up year over year since COVID, right? And there are a number of factors that go into that. Of course, there is rate changes, there are rate increases. And a lot of that has to do with not COVID per se, but the economic forces that came out of COVID, because, and again, we're now three plus years out of it, but insurance kind of works on a little bit of a lag because carriers need to see what the environment is like in order to then experience some of those losses that then drive premium going forward.
There's a lot of back end things that people know. Like I'm always when I'm out in the field, I'm just like, okay, do you really want to know about reinsurance a little bit, or
Exactly.
do you want to skip that? Because all these things take months, if not years, to correlate to multi-billion-dollar losses due to fires or international global conflicts, things of that nature.
Yeah, I mean, if there was an overall across the board inflation in 2021 due to economic outcomes from COVID and problems with supply chains, right? So then there was inflation that developed in 2021 into 2022. That then affected anticipated loss costs going into 2022 and 2023 because, well, if the things that you need in order to rebuild a home are going to be more expensive, lumber and labor. If wages went up after inflation went up, then that's going to affect then kind of the economic forces that affect insurance prices going forward. So if they anticipate that it's going to cost more to replace or rebuild or repair a home, then they're going to need to put that into anticipated premium needs in the next year. And so that's what helps, that's what affected rates. On the flip side as well, though, homeowners are putting some of their resources into their homes. And if you improve your home, if you put on an addition to your home, or you put on a nice, deck on the backside of your home, or you put in an in-ground pool, that's going to increase the premium that you're going to pay for your homeowner's policy. And so, and it's a good and right thing to do for your home, but understand that that's not due to a rate change. That's due to, you have a greater risk that's going to get transferred over to the insurance carrier. And so that's going to cost a little bit more.
What else on the personal side was worth bringing up?
Just to let folks know that personal auto is by far and away the largest insurance market that we have in the state. I mean, you remember some of the numbers we were talking about for commercial auto, we were looking at $233 million, property, $135 million, even general liability at $364 million. Personal auto is a different scale. So we're looking at $1.2 billion of written premium in 2024. It is a very large market. Rate changes, as I mentioned, similar to homeowners, rate changes did account for about 6.4% of that overall 10 or 11, closer to 11% increase from 2023. But again, like homeowners, we have more cars on the road. If you're replacing your 2010 minivan with a 2023, SUV, it's going to cost more to cover that vehicle. The vehicles these days are more expensive to repair. More things break when they crash. Some of those aspects, some of those gadgets that are on the newer vehicles do decrease the frequency of the crash. But when it happens, it's going to be more expensive to fix. And so there is that balancing act going on. Some of that does account for higher rates, but also the cars themselves are more expensive. And so that's going to affect overall premium as well. So premium is going up. We are seeing, and this doesn't necessarily affect the competitive nature of these analyses, but just as a side note, in 2025, we are starting to see a leveling off of rate changes. We aren't seeing the number like we did back in 2020, I would say 2022, 2023, where we were seeing frequent double-digit increases coming into the department for approval. We're not seeing that anymore. We're seeing low single digits. We're starting to see a couple of rate decreases, which is very exciting. So we do think that there are some brighter skies ahead in the auto market. Just from a competitive nature, some observations. State Farm Mutual Company is the largest writer in the state of New Hampshire. They write about 15% of the market as an individual company. But then again, if you look at groups of companies, for reasons that State Farm chooses, they write the 96% of their business they write in that one company. But Progressive Group, on the other hand, has, I think, 4 or 5 different companies that they write in the state. So if you're looking from a group perspective, Progressive Group together writes about 19% of the market. So, and then there are others. Berkshire Hathaway, also known as Geico, writes another 10% of the market. Allstate, Liberty, these are the other big players in the market. What we're seeing in New Hampshire, and I think it's important to note that what we're seeing in New Hampshire is very, very similar to what we're seeing across our region. We look at New England, and then we also look at countrywide, for this market analysis to kind of see how, some of the economic forces in New Hampshire parallel some of the things going on countrywide, and it's very, very similar. We got all the big players writing in our state, and then we have some smaller regional companies as well writing in New Hampshire, but things are pretty well stable throughout.
Anything else you want to mention?
No, other than there are 2 important lines of business that are not part of this analysis, whether it's just tradition or I don't know of other reasons other than we review medical malpractice separately. Yeah. And that is in the fall. We do an analysis, a much more in-depth analysis on medical malpractice because it is a little bit of a niche business. There are more concerns about that line of business just because there are very few companies that write it. And so currently it is indicated as a non-competitive market. And so we do keep a closer eye on that. And there's a broader analysis that comes out in October on that. And the other piece is workers' compensation, which is more highly regulated just because of the way the statutes are written in the state of New Hampshire and nationally because it is required by state law that all carriers and then all benefits are determined by state statute. And so it's a more highly regulated industry. It is doing very, very well as well.
It's been going down for more than a decade now. So.
And we do all indications are that we'll have some more good news this summer. So we'll be reporting out on that probably around Labor Day.
Chief Property and Casualty Actuary Christian Citarella, thanks so much for joining me.
Thank you.
You've been listening to A Matter of Insurance presented by the New Hampshire Insurance Department. Once again, if you have questions or concerns about your coverage, don't know where to turn, our Consumer Services Division is here to help. You can reach them at 800-852-3416, consumer services at ins.nh.gov or insurance.nh.gov.